Cool. All right, team. Well, very good afternoon to you all. I hope you're all doing well. Those listening back on the recording, same goes to you guys as well. So, first thing first, looking at the charts just on over the weekend, I am seeing that, in my opinion, we've got some good price action coming up. I'm not sure if you guys would agree with me. Feel free to unmute yourself, Rob, as and when you feel, and yourself, Lana, if you have any questions. But what I am seeing is, well, let me just double check. You guys can see the screen, right?
Yes, sir.
Cool
Yep.
stuff. Okay, so last week there was always that conflict based on the DXY. We had this order block here to the right-hand side, and that was really, in my opinion, it was conflicting with the bias because, of course, higher time frame wise, based on the DXY, I was expecting continuation in terms of bullishness coming out of the market, and that really is simply depicted on what I'll show you here. So we were in that downtrend, lower low. And then we broke up, breaking most recent structure points. It hadn't been confirmed at this stage because, in my opinion, the structure point was here to the left-hand side. However, in terms of being a little bit more intricate, because of course that is the weekly time frame, we had this as the break of structure. And then, of course, after this break of structure, in terms of double checking if I am incorrect, and that's something that I always, or something, well, correct and incorrect, not just lead with my overall bias. I want to know whether my thought process before the outcome develops, do I have a point there? So the first thing I was looking at to see this order block to the left to double check to see if I am correct, let's say, this should be the high in the market, followed by a higher low, followed by a higher high, higher low continuation. Of course, we have that now, but before, my inclination only stemmed from the reason as a result of this high. Now, when I'm double checking myself in terms of am I incorrect, what should the market then do from that element if I am incorrect? So, what should have happened then if I was incorrect? The market on a weekly time frame should have made a low. Now, I understand this wick on that weekly time frame, of course, from the lower time frame, that has indeed printed a lower time frame bearish structure. However, the importance must come out of the market based on what's going on in relation to this weekly order block to the left-hand side. And what we can see is prices failed to break and close below. Therefore, my initial thought process in terms of, okay, then Charles, this could be a high followed by a higher low. Look for the liquidity in terms of the point of interest, and then we've had that higher high come out the market. Now, of course, the only reason why it's taken so long really to materialize based on that thought process, of course, we're viewing weekly candles. But looking at the weekly candles now, we've had that higher low here, excuse me, higher high, followed by the higher low, where of course we were looking for DXY strength to push into the market. However, the caveat to that in terms of the confusion that we had throughout the pretty much entirety of the month thus far was this order block. So you can see our trading range was very, very, very restricted as a result of that order block. Now, I understand based on the higher time frame, of course, we were not really anticipating a further low to come out of the market, but in fact, what we were anticipating was much towards the opposite in terms of a high, higher low for that higher high continuation. But we can't ignore the bias. If we're going to put an order block here in terms of a weekly order block, we have to wait for, I'll ask it rhetorically, a weekly candle to close above that weekly order block for us to do this. Simply get rid of it. And now we zoom out and have a look where could price want to gravitate. But forget about where price is going to be wanting to gravitate for now. What do we have now confirmed? We have confirmed DXY strength. And in addition to that, there is no hold up in terms of order blocks where the DXY could potentially run into. I quite understand here to the left-hand side, we have this higher time frame order block that prices failed to close and break above. However, at some stage, we've got to close our bias. I can't remain bearish on the DXY based on this order block to the left-hand side that's been mitigated over and over and over again. So we've had an immediate mitigation as a result of this bearish. Let me draw that out so you guys can see what I'm talking about. We had this bearish engulfing candle just here. That bearish engulfing candle, what's the importance of it? Well, it broke structure to the downside. Therefore, we had that low come out of the market. Therefore, we retraced price back up, and here is that order block. Straight away, that order block was mitigated, and price made the low. Now we've gone across again. Price has wicked into that area, and price has not. This is the importance. Price has not made the lower low from that area. Therefore, it's not that I'm going to ignore it 100%. But what I am more gauged towards is I now have the confirmation based on that DXY strength as a result of that failure to break and close below, first and foremost, the weekly order block. And secondly, we are no longer making lower lows. You can see it. We're no longer making lower lows on that weekly time frame, and very clearly price is stepping up. That's one outlook that I have on the DXY. And I think that wouldn't be a bad outlook to start the week with, in all honesty, recognizing that DXY strength long term, almost, well, we won't see in the immediacy, but certainly long term towards at least the end of the week, as soon as price starts to come back down towards that weekly order block that we've now got in the market here as a result of those last few weeks of bullish pressure coming out of the market and the importance again. The question always, you must double check me as I double check myself. Why am I feeling that we could have that? Not just so much this information here, but look at that. We have a break of structure, a clear candle close above even most recent basic price action and structure. So it is what it is. It's a break of structure. When price returns, I'm going to be very much so DXY bullishness coming out of that market. And I will in turn be looking for that weakness coming out of our crosspairs such as GU, EU, and AU. And we'll go from there. However, what I will throw into the mix is, of course, what goes up, again, rhetorically, it's probably going to come down as a result of that's where we would like to buy from. It doesn't necessarily mean if we're going to trade the index alone that now is a good place to sell. But as traders, we understand, well, if our higher time frame analysis is telling us that this area, which is better illustrated based on this daily order block, again, why? Look what price is doing. We've had that push break above an area in the market. We retrace where the breakers come from. Is there an order block there? Yes, there is by way of daily order block. Well, let me sync that on all intervals, and you can see exactly where that comes on the 4 hour. Then I double check myself again. Does that make sense based on the most basic format of price action and structure in terms of higher highs, higher lows, followed by higher high continuation, higher high, higher low, higher high? What would I be expecting? A higher low followed by a higher high continuation. Does that make sense based on what I've spoken about on the weekly time frame already? Let me help you out by putting this on all intervals again. Sync globally, that is our weekly order block here. Now, of course, we're not going to be trading from weekly order blocks because weekly order blocks are far too large for us to manipulate those. So what we do, we simplify those down, refine, daily 4 hour, 15, and then here we are on the 15-minute time frame. I won't go too in depth on the 15-minute time frame because I was looking through the Financial Times and they're literally just playing with the Strait of Hormuz as if it's sort of taking Haribos from children, then giving it back, then opening, closing, opening, closing. And it's a bit unfortunate because whenever I've seen of late that price action just looks so beautifully easy to depict like this, they start to mess around with the fundamentals, i.e., opening and closing. Well, pretty much I won't say majority, but 20% of global oil is coming through a really, really, really small oceanic point in the Middle East. And every time they open and close it, it's just playing absolute havoc with our price action. Nevertheless, the technicals, just to finish off on the DXY, the technicals for me are as clean as I've seen for a very, very long time. So always trust your technical analysis. Once then you're ready to execute your position, double check the DXY to recognize if the DXY is in a position to be turning around, i.e., if price is down here on that on coming into next week, or even if price gaps down to here. We already know what the plan is moving forward. It doesn't necessarily mean take immediate positions on the crosspair in terms of shorting GU, but it would make sense to have a deeper look potentially or specifically on the 15-minute time frame once you start refining these areas down to understand, right, well, if price starts to drop back down to these areas on the 15-minute time frame, I understand on the way down we're incredibly bearish. Now, in a bearish market, do I really want to be taking a immediate long position? No, I do not. However, my higher time frame bias is telling me that I should be looking for buys. So what I am then open to do is highlight a structure point in the market where I foresee, well, simply based on price action structure, where's that most recent lower high that's caused that lower low? I'll wait for that lower high to be broken, pull back into an area of interest, and therefore at that stage in the market, I am trading alongside higher time frame weekly, alongside the daily time frame. That also, if I move this to the left, looks absolute textbook as well. Higher high, higher low, higher high, higher low, higher high continuation. It's absolutely beautiful. When I see price action like this, I'm already halfway to the bank, I'll be honest with you guys. And simply taking these types of position once only they're developed is the basic and most easiest way to trade because if I am still wrong, trading this type of structure, waiting for breaks of patterns on that 15-minute time frame, taking a position and loses, I couldn't care less. What else am I supposed to do? It's textbook. So keep that all in mind. Higher time frame DXY longs, immediate short positions on the DXY. I'll be honest, I haven't got a clue where the DXY could potentially turn around from in the immediacy. However, looking at the cross pairs, that will give us a nice incentive to understand when that DXY could potentially turn around. That could may well play in nicely for us on our crosspair positions. So just a moment. Someone else is trying to gain access and they're telling me they can't. So just a second, team. Sorry to keep you. I promise I will go a little bit faster. 2 seconds. Sorry, guys. I'll be right with you. All right, back with you, team. Okay, so that's a general consensus of the DXY. Now, with everything we've said about the DXY, higher time frame, long scenario, let's take a look just specifically at GU, a cross pair, and then we'll look to understand how we can then tie that into the DXY. So, last week, I wasn't able to gain any entry at all on GU. Was waiting for the pullback. Have barely really needed to update my charts in all honesty in terms of the higher time frame order blocks that I'll be looking to short from. As you can see on the 15-minute time frame, it never came back. And I'm not one to take positions in the middle of nowhere when I have no reason to do so, despite having pretty much well, I'll be honest, and I'll be fair to myself. I recognize the majority of times where price is going to go. I'm happy and I'm confident enough to say that without being slightly big-headed, but it doesn't necessarily mean I can take those positions in all those directions. As I said, last week price was up here. I wanted price to pull back for a short. I wasn't able to because price moved without me and price just carried on doing, oh, blimey, doing what it wanted to do. And that's fine. We're investing. We're not risk taking. If you fancy risk taking, I suggest going to the casino. You get free drinks. Sometimes you even get free food. It's a lot more fun. We're investing long term and we have to simply trade our strategy when it shows itself. And I'll show you the position that I took last week on GCAD, which was pretty much textbook. And Rob called it as well in the morning. I think that was Friday. Pretty much a textbook position, which left me pretty much no other alternative but to enter because there was nothing else in the market. Nevertheless, I'm sidetracking. Weekly time frame on GU. Only information I have in terms of shorts is coming from the high, and that's this weekly order block. That again, the reason why I've kept that on the chart is because prices failed to break and close above, and prices rejecting it to the downside. Therefore, it has a bit of well, there's definite valid reason for it to be there. Do I really think price is going to gravitate towards those highs again? I'd like to think so. At some stage it will, and when it does, I'll be there ready for a short. But most importantly, what I will discuss is the long case scenario. So for us to take a long position on GU, we have that anticipation of DXY potential weakness. So although GU is in this daily order block perfectly to perfection, we can see here. And again, why am I highlighting that daily order block? Well, price has shown itself even on the daily time frame that we can make lows in the market, lower highs, lower lows, lower highs, lower lows. And what's this? Price has pushed up towards the upside, breaking structure point, structure point, structure point. Therefore, at some stage, I must say, GU, okay, I am bullish. We've broken structure towards the upside. We've pulled back down. Is there an order block there? Absolutely. Yes, there is. So when price comes back down to that order block, I'm expecting price to want to push out of that order block towards the upside. I think that's very fair for us to come to that conclusion. Nevertheless, it doesn't necessarily mean price is going to push all the way to the highs, but what I am anticipating is at least price enough liquidity to allow me to move my position to break even and risk manage accordingly. So, what I like to see is EMAs on that daily time frame. So we have a clear target if I was going to be looking to hold that position towards, let's say, the daily 50 MA. However, what we do have to come into contention is the weekly 50 MA, where last week's weekly candle closed below it. Therefore, I am expecting for the week price to want to gravitate up towards that weekly 50 MA and potentially towards the daily because I don't really expect price to reject the weekly 50 MA as soon as it taps it. As you'll see here, price was above, or let's say before this weekly candle, last week's weekly candle, 2 weeks ago, before this weekly candle closed above that weekly 50 MA, look where price got to. It price pushed all the way down and still closed all the way back up there. So, although this is a weekly candle bearish, and although price could well push higher, I still expect price to potentially gravitate towards slightly above before giving us that rejection to the highs. That in itself is going to play perfectly. Very good afternoon, Philip. Thank you very much for joining us. That will play in perfectly with what we've already discussed regarding the DXY in terms of DXY strength coming into the market from those highs. So, what we have at the moment is price action in that daily order block. We've already come to a conclusion why that order block makes sense. We've already understood our long-term targets by way of weekly and daily 50 MA. So, as I always say, do we have a reason at the moment to look for a long position? As I've mentioned, despite being in that higher time frame point of interest where we've already anticipated a reaction from that area, I still know I currently still do not have any valid reason to take a long position. Yes, my anticipation is for GU to move long as a result of anticipating DXY weakness coming out of the market, but I have no valid explanation to take that long position yet. So the first thing we'll fall back on is immediate structure on the 15-minute time frame. Now, it can be a little bit far-fetched as a result of it being the weekend, as a result also of anticipating a market gap because they're just playing happy-go-lucky with the Strait of Hormuz. So I'm definitely anticipating a market gap in one direction or another. But play the game with me. Let's say the market doesn't gap and we, let's say, open down here. Again, do I have any reason? And this for me is going to be the worst case scenario. I love to discuss the worst case scenario because many traders don't understand when price gets to their area without breaking structure on the way up prior to taking the long, people start losing their heads at this point. Now, the reason why I'm bringing that to your attention is because my previous analysis had this 15, let me get rid of that for a moment, had this 15, let me make that slightly larger. No, not that way. Let's do it like this. This 15-minute order block where price tapped into absolute perfection. So I have to give myself some credit at some point. Again, it doesn't necessarily mean I could have taken that long position. But if I scroll to the left, pardon your eyes for a second, we can see just underneath that daily order block, we had this session low in the market. So price came right back into that area and we've had the immediate reaction. What I like about that, despite not being in the position, is we've had a reaction from that area, and that reaction has left us with a 15-minute order block. Again, if price comes back down to here, I cannot, well, I can take a long position, but I have to understand that that long position is going to be a very aggressive long position. And now I'll revert to the reason why. Structure on the 15, lower low, lower high, lower low. So where is the key structure point in this area for you to feel confident and comfortable when risking significant amounts of money for you to take a long position based on market trend and upward direction? And this is what traders are failing to understand. When I mention I'm going to be taking an aggressive position, I recognize that my long aggressive position, which I'll illustrate first and foremost for you. So let's say price starts to trend down in this manner. It's then down to me to locate the most recent lower high that's caused that lower low. That for me is my most restricted area based on where I can anticipate a reaction for price to revert back towards the downside. Therefore, if I'm going to be taking a long position, I'm going to be looking for a very intricate lower time frame break of structure in order for me to move to break even by this point in the market where it's very likely based on immediate structure that's happening first thing Monday morning that I now can anticipate that. Now, the best case scenario, something that I teach in mentoring, is to always wait for price to develop first. If price moves without you, you've not missed anything. You're simply awaiting your strategy to develop. And then once price breaks up, we're no longer trending in a downward state manner. We've broken structure towards the upside. Simply sit and wait. The order block is already there. Even better if price actually reverts down to this area without breaking those highs, which for most people is the worst case scenario. But for me, it's actually the best. Forget about the aggressive criteria that I'd be happy to take depending on where the DXY is. But if price comes straight back down to this lower time frame point of interest, what I'll be waiting to do is wait to see if price is still going to break that structure point. Prove to me that I can take a long position from this area. So if price breaks that structure point and I'm not in that long position, I care less because at least by the time I get in that long position, I already know that price is developed. If I take a long position before price has broken towards the upside, I'm taking a position like so, where my stop loss is required to be at least, let's say, by maximum 15 pips, because I don't really want to have to go to break even before that structure point. Excuse me, I don't want to move to break even before a 1-to-1 risk to reward ratio. At least it needs to make sense. I can't have a stop loss like that and move to break even at this stage. It makes no sense, right? So what I'd be more inclined to do is simply wait for the structure point to be broken, sit on my hands, put a nice alert just here once price comes back down to the area. Hopefully when price breaks that structure point towards the upside, we'll then get rid of this order block and we'll start putting another order block in the market, and then we'll simply wait for price to break up, pull back down, wait for a very lower time frame intricate break of structure and take that long position. Even if you don't want to wait for that break of structure on the lower time frames, it's fine because your confidence and rather confluence you already have, because your structure point is no longer a structure point. All it is, in fact, is an illustrated break of structure towards the upside. And now not only are you trading on alongside the 15-minute time frame, you're trading alongside the 4-hour time frame by hopefully at that stage, an area in the market here will be broken towards the upside. And you see, look at my crosshair, where this market, just by eyeballing via the optics, just looking at structure, my crosshair is exactly at this point. And what we'd love to see is a 4-hour candle close above that area. And you guys already know, once you've had that lower market 4-hour candle close above the area, wait for price to return and pull back. And it's exactly the same on the 15-minute time frame. We've already understood why we should be looking for a long position based on the daily time frame. And there's not too much on the weekly guiding us, but for price just giving us some nice targets where we'd look to see price gravitate up towards. So does that make sense based on the DXY? I'd say yes, it does. Can we anticipate DXY weakness rolling out of the market to the downside? Yes. But as I've mentioned, I have no idea where from at the moment. So what we're going to need to do is wait for price to develop on the DXY to have that confidence. And what that will look like as the DXY, I won't go in all of these in such depth, but just to whet your appetite. Once the DXY, we know the DXY is up at those highs. Once we get our confirmation on the DXY by bearish trend towards the downside, what are we going to then have in the inverse, which is a correlated pair on GU? We're going to have this. We're going to have our break of structure, going to have price rolling back to the point of interest, and we're going to be looking for a position. So no immediate positions to be taken. Absolutely. If you feel the need to take an aggressive long position on GU, go for it. I won't be entertaining that. I think the week is long. Price action looks good. Why waste a potential trade when you can just wait for price to develop? And I look forward to going to GCAD towards the end, where I'll show you the position that Rob and I discussed on Friday, which was a very nice position, perfectly. And as I mentioned, when you're back testing, you always wait for those positions, right? It's just you're clicking through the candles, you're getting through days worth of price action in about 5 minutes. So why, when we return to live trading, no one has the patience to wait for price to develop? It blows my mind constantly and it makes me go off track. So the next pair, that's GU. So we've spoken about DXY, we've spoken about GU. So now with that in mind, we'll be able to rock it through the rest of the pairs. So GU, what's interesting about GU and EU is although they're correlated pair, you can definitely see what's weaker. So for me, I'd be more so inclined. Well, I won't give that statement just yet. No, I will. I'll stand on that. I'll be more inclined to take a long position on GU than taking a long position on EU. And if I flip-flop between the two and have a look at the daily time frame and what we have that we can look to play with. So this is EU and that's GU. So the daily time frame on GU, we're looking to manipulate that daily order block that price is currently sat in already, just here to the left-hand side of which broken structure towards the upside. Now, if I flip to EU now, hopefully, I don't have a daily order block to play with. There's certainly prior price at. Have I been a bit premature? No, there is no order block that I can play with. The order block that I was looking to manipulate towards the upside last week was here, and price absolutely crashed through it, leaving me with no real position on EU at all. So again, if I'm now looking to long either GU or EU, this is how you need to use your market analysis to understand, well, hey. Clearly, EU is a lot weaker than GU. So why don't I wait for price to develop on GU before taking a long, as opposing to getting a little bit too excited and taking a premature long position on EU? Have my word, it's going to materialize like that for you, particularly when you're uncertain about what you need to be doing when looking at the market. And this is where you'll get stung because absolutely, in my opinion, I think price action in terms of structure point is more likely to break structure towards the upside on EU, pull back and give you an indication for a long position before it's fully ready on GU. That will entice you into potentially a longer position on EU. But why would you want to take a long position on a pair that is, or rather, the primary focus pair, i.e., Euro, when that is very much so clearly weak? So what am inclined to do is wait for some aggressive short positions on EU potentially, and well, we'll see what will materialize. So let's go from the top. In terms of weekly order block, up at the highest. Only thing that we really have to play with. If I feel the need to crowd the chart as a result of last week's bearish candle to the downside, I could put in a weekly order block just here and have the anticipation that price, even based on that, right? With a weekly order block sat to the highs, what are you inclined to be looking for? Short positions out of it. You're not going to really want to be. And in fact, part of my focus of my trading plan is I cannot take a long position when I am in a higher time frame point of interest, i.e., weekly order block where price is anticipated to make that low, pull back for a lower high for a lower low continuation. It makes no sense for me highlighting an order block here on a lower time frame and looking for a longer position into a weekly order block where all the liquidity is sat there towards the downside. So with that weekly order block place in the market, we're supported short now by that weekly 50 MA. And we have to, when discussing the weekly 50 MA, we have a look at the performance. What's the EMA doing? Well, finally, we've broken below that EMA. Here was our clue. We broke below it finally after, well, a duration of time of rejecting closing above, broken below that weekly 50 MA to the downside just here. Last or 2 weeks prior, price tried to break above and close above that weekly 50 MA. However, price failed to do so, telling us that we can trust that weekly 50 MA. And as a result of last week's candle closure, look what happened. Price tried to break above and price tried to close above that weekly 50 MA. But what do we have? A bearish candle closure. So when price returns back to that weekly 50 MA up here, what am I looking to do? I'm certainly not looking to take a long position. I'm looking to anticipate a lower time frame break of structure before taking price towards the downside. Now you're saying me, okay, Charles, well, if you anticipate price will move to the highs, why are you not going to take a long position? Because my long position, we've already understood. We're going to take longs on GU, not EU. And I'll potentially just wait for the better case scenario to short the weaker pair once price gets there, which could well be short EU from the highs because it's the weaker of the two and long GU from the lows. Does that make sense? I'd say so. And in terms of risk management, because you know you can't, well, it's up to you how you guys are trading personally. But for me, I can't take a long on GU and a long on EU. I may as well risk 2% taking one position. It doesn't really make too much sense for me to be doing that. Nevertheless, in terms of the here and now, what do we have? So structure point is overwhelmingly bearish, unfortunately, on EU, despite having the inclination that based on DXY moving towards the downside, we can, of course, anticipate EU moving towards the upside. But until I get the confirmation that price can actually move towards the upside, then I'm not looking for any positions, even to the left-hand side on the 4-hour time frame. EU, let me keep it zoomed out so you can see what I'm talking about. In terms of most basic price action structure, and I always start on the 4-hour time frame, lower low, breaking structure to the left, lower high, lower low. What am I expecting? A lower high to be formed. So I know that my long position in terms of any immediacy is more than likely just going to be the lower high extension, which I don't mind, but I certainly want to be in the game when I'm waiting for that lower low to be created. Now, why is that of any importance? Well, if I look to the left-hand side, what I see here is structure points to the left on the way up. The price has most recently broken. Therefore, I'm very much so in a downward trend on EU. Therefore, I'm not really liking to take a long position when I don't have any higher time from directional bias supporting my long position, like what we have on GU by way of daily order block to the left. We have nothing here to start to build our bias up. Therefore, we have to wait for the bias to be confirmed. What's that going to look like? Well, first and foremost, based on the 4-hour time frame, I am seeing some order block straight away. I'm not going to wait for that, I'll be honest, before taking a long position. That's more than likely going to be a target if I am going to entertain a long. That's going to be my immediate target, which is nicely supported by the fact that 4-hour 50 MA is just hanging around that area. So price is going to want to gravitate towards that 4-hour 50 MA at the very least before looking for a turnaround. And then based on immediate price action on the 4-hour time frame, what you can see on the lower time frame, low, lower high, lower low, lower high, potential lower high here for a lower low. Therefore, target. What would I be willing to do based on immediate positions? Eyeball, use your optics. What looks good? Price is failing to break above this area for whatever reason well, 1, 2, 3, 4, 5, 6, 7, 8, 9. So what's that? Roughly 40 hours. Therefore, if I get a 4-hour candle close above that area, that's telling me potentially now I can look for a potential, and I emphasize the word potential because I don't really like this position, but I will go through it because it's more than likely it will materialize. And if I take it, you guys will say, well, why have you taken a long position? You said not to. Here is a good long position that could materialize. So 4-hour candle closes above the area. It's something different. It's something that hasn't happened. Be sure that in order to take that long position, price cannot tap into this higher time frame order block in terms of this 4-hour, because if price breaks above, taps into this 4-hour order block, and then comes back down here, I'm not going to take a long position then. What am I going to be expecting after price actually taps into that order block, whereby price is printing beautifully towards the downside? I'm expecting that. So it's very clear for me that before I take a long position, I have a couple of criterions that need to be fulfilled. Price doesn't tap into this higher time frame 4-hour order block, first and foremost. That is 100% must. We'll start from there. As a result of price developing from the starting to break up above that, it needs to be a 4-hour candle. That's criteria number 2. And then price needs to roll back. I understand it's very unlikely for me to build my bias based on a 4-hour order block. I get that. So what I'm going to need to see then, based on the 15-minute time frame, is clear price development towards the upside. And what I think it would be is this key structure point here needs to be broken. Probably, let's have a look at where this line materializes. There you go. A little bit lower, but that's just immediate structure point. Who are we to say price hasn't made the low from here or price hasn't made the low from here? So I'd say the key or the best case scenario, wait for price to if I get my words out, price to break above that key structure point, roll back down to this area. When price rolls back down to this area, ensure you've got a 50-minute order block there. If you don't have a 50-minute order block there, you're going to need to want to see one develop. That's going to be by way of bullish engulfing candle on that 15-minute time frame, that will definitely, I will give you my word, there will be a 15-minute order block. As so long as you have a bullish engulfing candle on the 15-minute time frame, you'll have an order block on the 15. You're more than likely going to have an order block on a 5-minute time frame as well. And then once price shows you that it's not going to make that low, grab that entry, take price back up towards our better case scenario where we'd be looking to take price towards the downside. So that's my plan of action on EU. Despite having an understanding where I believe price is going to go, there's certain amounts of criteria that needs to be fulfilled for me to take that position. Now, I'm going to get to the chart tomorrow and I'll see loads of people taking immediate long positions, and good for you. But for me, I can't deviate from my strategy, of which I know works so goddamn well. So that's EU for me at the moment. Then, of course, up at these highs, we've already got that refined 4-hour order block. In fact, that's not that order block, that's slightly lower. Right up at these highs, which for me is going to be the best case scenario, because that will be price actually trading back up to that daily order block, daily 50 maybe, before rolling back down. If I put my crosshair there, you can see exactly where it shows up on that 4-hour. So here's the best case short position, in my opinion. I'm not going to discredit this order block here based on basic price action structure. We've made the low from there. Price comes back up. I'll certainly look to see what's going on in around this area here. So it's worthwhile. But as I mentioned at the start of the call, I do believe this is very, very, very nice price action. And as I mentioned, in addition to that, usually the fundamentals are here to kind of ruin that. And well, let's see what happens tomorrow. Well, tonight, 11 o'clock tonight, my time. Let's see how market opens. So that's EU and Geo. Thought to cover those first. So as a result of the DXY being in mind, let's take a look at something slightly abstract, GJ. I don't mind GJ. I swapped it out for EG. Haven't looked at EG for quite a long time. However, GJ, I started the analysis based on, you have to hold your eyes, but all the way to the left here, 2008, we had a nice wick imbalance. You just have to take my word, it's here. Using that as most recent price action, I start to build the bias up to understand, can we anticipate price turning around from that area? Since price has come into that wick imbalance, we've not really done anything at all. However, I still see there could be a decent position on GJ, I'll be honest. Particularly as price starts to develop now on the lower time frames, I don't mind it so much. We'll take a quick look at it and see what we got. So based on the weekly time frame, there's not too much to speak about. But what I do like is there's a clear target based on a weekly time frame, based on where I'd like to see price gravitate towards. So if I can understand where I believe price is going to go longer time, then I'm patient enough to wait for my entry criteria setup confirmation and short down into that area. Of course, on the way down, we're going to run into some traffic by way of EMAs, lower time frame order blocks as well. But nevertheless, good afternoon, Mr. Guest. Thank you very much for joining. Nevertheless, let's see what we got. So weekly, not much at all. Daily, I think that's where the party really starts to kick off. What do we have? What did I see earlier on? Okay, cool. As a result, we'll start from the top in terms of basic price action and structure. We understand that was a wick imbalance. Price made a high from that area. We've rolled back and understand where did price actually break from. Here's that order block. So as a result of that high, anticipation of what we've already discussed, higher low, looking for a higher high continuation. Did we get that higher high continuation? No, we didn't. In fact, what we had was quite the opposite. We had price roll back up into the daily order block in the opposite direction, which is this tremendously, where have we gone? Tremendously large bearish engulfing candle that wiped out price action, about 2 weeks worth of price action to the left-hand side. Let me keep that back on the charts for you guys to have a look. Therefore, we've got a nice trading range. Where this break of structure occurred, I've highlighted that order block, and look what we've had. Price wick in, here, and failure to break above, meaning that, okay, the first question is, okay, I can always be wrong. Price can still make that higher high, but I have signs that we're failing to do so. So therefore, if I'm having signs that price is failing to break above a certain area, I'm not looking for long positions, I'm looking for short positions from that area once it makes sense. So as a result of using that daily order block, prices come back in, come back in. A couple of days ago, we had, guess what? Another bearish engulfing candle. That delivered us with another beautiful daily order block to the downside. So, much like what we've discussed throughout all the analysis thus far, once we have that break of structure, by way, again, we're getting it, what am I anticipating? I appreciate this is the daily time frame, but once you understand what's going on the daily time frame, scrolling down to the 4 and the 15 just becomes child's play. It's just far too easy once you understand it on the daily and the weekly. Lower low created, lower high, lower low continuation. Does that make sense based on what we've spoken about? Yeah. However, we got some hold up. We've got a nice trading range as a result of price now in the opposite direction daily order block as well. That's why I think that this could be quite a nice pair. If you're not comfortable trading it, at least try to follow it to understand what's going on. We've got a nice trading range based on the fact that towards this daily order block, this is where price is actually broken up towards the upside. So it's quite interesting. We've got price showing signs of rolling to the downside from this order block here, and we've got price showing signs of rolling to the upside from this order block. So therefore, our job is very, very easy. We've just been delivered from Santa Claus a beautiful trading range towards the highs where we want to be selling from and towards the lows where we want to be longing from. How more easier can it get to make some money trading the market? So once we start to refine those areas down into our 4 hour time frame, here is where we are. So we'll start from the lows because that's where price almost tapped into. Let me just double check myself so I know that it's correct. So let's move that slightly to the left so I can see it. Okay, there's the order block. And what I'm liking to see is the fact that price hasn't actually tapped it just yet, meaning that the direction of price action that I want to be selling, oh, I've given it away. The direction that I want to be in is selling because I haven't tapped into the higher time frame point of interest where I want to be looking for a buy. Again, we can potentially expect some market gaps over the weekend, or rather over the next couple of hours. But nevertheless, overwhelmingly, even based on EMAs and price action on the lower time frame, it's giving signs of following the trend, which is bearish. Now, you're going to ask me to show that. Of course, I will with grace. Eyeball optics. What does it look like? Price was failing to break above this area in the market for these are many, many days. In fact, just call it a couple of weeks. We've had the importance of this. Where have we gone? This. Oops. Candle has closed below, giving us the incentive that we have broken below bullish structure of which was keeping price towards the upside, broken below. Therefore, the 4 hour time frame, can we understand if that's equally represented on that time frame? Let's have a look. So price action, most recent. Here's an area in the market where price was failing to break and close below. And in fact, price made its most recent high from this area. Therefore, break of structure, that's our first sign. That's the low in the market. After a low in the market, we would anticipate price to make what? A lower high. That's a lower high being created. And now what's happened? A lower low in the market. So therefore, my next anticipation based on basic price action and structure after a low, what am I expecting? A lower high. Would it make sense for price to want to gravitate in towards this area? Perhaps. This area also, maybe so. So I understand there's two potential positions here on GJ in terms of the short position where I think it makes absolute sense. 4 hour structure makes good sense. I'm supported short by daily 50 MA. Let's get rid of that for a moment. Why daily 50 MA? Well, as we've said, most recently, price has been following that daily 50 MA beautifully, wicking down, staying above. Now price is broken below, wicked up, staying below. Therefore, if price gravitates into that daily 50 MA, what am I expecting? Rejection to the downside. Where does that daily 50 MA show up for me? Right by this 4 hour order block. That has done what? Broken structure to the downside. It's textbook. We continue, continue, continue. It's the same thing I'm discussing on the DXY, which I'm not trading. It's just an index user's confluence. The same thing through all other pairs. It's boring. I expect you to think that this is boring at some stage because this is how straightforward it is. It's whether or not you're going to wait for your plan, it's whether or not you're going to make money or not. Therefore, 4 hour order block. Why I love to take a position from that is because it's still available. Price hasn't tapped into that order block, which I like. Much like the other pairs, price has kind of been in, been out, been in, and we've kept it in the charts because price has failed to break and close above. I like it, it's available. Therefore, using now the 15-minute time frame, look where we are. It's a key structure point in the market. Therefore, I want to be taking, not immediately, but certainly I want to be looking for a position from a key structure point in the market. And the answer why is because if I am wrong here, I'm just absolutely wrong. If I take a short position from this 15-minute order block just there, supported short by everything we've already spoken about, and I still lose that position, what can I say? I could do no better than to take that short position based on 4 hour daily, based on all informations that we've already gathered. Why does that make sense? Even the 15, here's a low in the market. We'll just highlight an area. You have to ask yourself, where did that low come from? In my opinion, we had a low, lower high, lower low. Therefore, I expect price to want to gravitate back up towards this area, mitigate this all, both order blocks, find liquidity, and drive price back to the downside. I think that's very reasonable for me to expect that from the charts. If it doesn't happen and price breaks and closes above, then I'll just wait for price to return to the better area up at the highs, which is this daily order block that is the responsible reason why we're looking for shorts in the immediacy anyway. So that's why I said I like GJ. In terms of the shorts, I like it. What I'll be looking for tomorrow morning. Let me give you guys a nice scenario because we already have our order blocks there pretty much waiting for us. Now, based on the fact structure also is on the way down, what I will have a look at is just what's going on in the immediacy. Structure point in the market. Perhaps price opens. We have a nice Asia range like so. Now, this will be a beautiful Asia range position. Why do we have a break of structure to the downside? Yes, we do. Asia range is then created as price starts to move up and down. And then what we'll have is, so there's Asia lows created there, Asia highs at the top. I'll just be gaining confluence to take that position. Then, if price then opens in London, comes into that area, what would I do? What would I do? I will wait for a bearish 15-minute candle closure from that 15-minute order block simply because it's old price action. If we were talking now on a Monday already, and this is already developed for a Tuesday, I'll be waiting for a lower time frame, 1 minute break of structure, and I'll be in that pretty much immediately, no hesitation whatsoever. Because I'm using price action from 18th of June, which, okay, last week, it's not the end of the world. But I think it would only be fair to our account balance to wait to see what's going to happen when price actually returns back to that 15-minute order block. As I've said, price is going to open tomorrow. The 4 hour 50 EMAs are going to move slightly as a result of price printing towards the downside. I hope the 4 hour 50 EMA is actually even lower. Therefore, and what I mean by that is the fact the 4 hour 50 EMA is currently there, I have every anticipation to expect price is going to want to gravitate towards that 4 hour 50 EMA and potentially take me out of any immediate short positions. Therefore, me waiting for a bearish 15-minute candle closure or bearish engulfing will safeguard me against that because as price starts to trend up and I simply wait for that bearish 15-minute candle closure in the downward direction like so, what that will then allow me to do is highlight a brand new 15-minute order block. And again, you'll have to take my word. When you get a bearish engulfing on any time frame, you will have an order block on the interval that it has printed on. And as soon as price prints back into the imbalance of that 15-minute candle, I will be taking immediate short positions on GJ. Can I be wrong? Absolutely. But am I happy to take the risk? Absolutely. Therefore, it's a trading opportunity for me. That's GJ. I feel like I'm taking age on these, but a good explanation is always worth a crap one, in my opinion. So that's GJ. I like GJ a lot. We'll see how the cookie crumbles overnight. UJ. In terms of UJ, so what are we anticipating on GJ? We're anticipating potential shorts. We've got a nice trading range. We already discussed that. So UJ, we'll treat that separately. We'll forget about the correlation for a moment, but what we will use is the DXY. So, in fact, I like UJ as well. Let's roll with UJ. So UJ, higher time frame. Why am I potentially looking at it this way? Well, weekly order block, weekly time frame, weekly 50 EMAs. What's going on in the weekly time frame? And again, you guys that are frequent here, you know I don't usually zoom far back into price action history to try and gain the bias. But when it's obvious, I like to explain the reason why. Because we're at the highs of an area, we're at the highs of price action. But that doesn't matter to me. I need to understand the order block that I'm using. Why does it make sense that I'm using? Because I could be putting order blocks here, anywhere I want. I want to be using the highs and the lows, and I want to be using areas that have broken structure or at least provided me with a decent bearish engulfing candle or bullish engulfing candle from an area. And then I want the liquidity left over over for me to trade from. So price was printing higher highs and higher lows here on the lower time frame. However, it's a weekly time frame, so you're just going to see the higher time frame picture. Price came out of that area doing what? If you just look at it as in the most simplest of formats, what has price done if I drew one simple line from that area? Have we broken below this line? It's a yes or no question. If we have, the answer is this area becomes a point of interest when price returns back there. So, of course, September 2024, you're not really thinking about when price is going to return back to this area in June of 2026. But nevertheless, I've done the work pretty much so you guys don't have to. And the order block is there as a result of that break of structure. Anyhow, 2 years later, we're here in that order block. Right. Now, the question that I always have to answer, Charles, price is in the point of interest. What are you going to do? What are you going to do? Well, we're printing incredibly bullish into that area. So I'm not going to be taking shorts despite I too want to take shorts from that area, but it doesn't make sense to take short from the area just yet because if I look at the lower time frames or even the daily time frame, what's price been doing based on the DXY strength over the last couple of weeks and months? Bullish or bearish? Very simple. Bullish into an area. Do I want to be taking short positions when price is bullish? No, I need to wait for price to break some form of structure before I can have the confidence to take a short position. I'm not asking you to move mountains, but what I am saying is that, well, it's not going to be on the daily time frame, but what I am saying is for you to start being a little bit more profitable and stop moaning at me, wait for your breaks of structure. And if price rolls without you, you haven't missed a position. You're just waiting for the better setup. In 2000 and whatever it was, 2024 when this happened, 2024, you wasn't concerned about what was going to happen in 2026, but we're here now. The only thing you need to wait for is a break of structure. We've waited 2 years. I'm pretty sure you can wait a couple of 4 hour candles to print bearish to give you the confidence to take a short position down. Anyway, that's me moving on to a ramp. I hope you understand what I'm talking about. Now, how's that break of structure going to look like? Once we refine that weekly order block down from 2024, I've done the work again, so you guys don't have to. Just take my word. I won't ruin your eyes zooming all the way across. But here's a daily order block, refined within that area. So the picture's getting better. However, what's the performance on the daily time frame? What's the performance on the daily 50 MA? Bullish, bullish, bullish. I'm getting no indication to be looking to short yet. And based on simple optics, I'm looking at this area in the market. Am I going to really wait for that? Probably not, but that's what I'm guided to at the moment. Also, I'm looking at this area in terms of imbalance in the opposite direction towards the highs. I'm looking at that daily order block, daily order block towards the upside. Let's get a better image of that on the 4 hour to see what makes sense. Let's see where this comes out globally. A little bit lower than I'd like, but it makes sense nevertheless. So what do we have? Is price action in this area of market action? Are we bullish, bearish? Are we moving sideways, up, down, left, or right? Bear in mind, this is an uptrend. Bear in mind, this is a downtrend. What's going on in this area that I've highlighted just here? That's exactly it. Nothing. Therefore, we are ranging. Therefore, does it make sense why we're ranging? When you get to the highs and lows of critical points of interest in the chart, it's very likely that we will be ranging. But one thing I do like to see is when I've refined that daily order block down, right up at the highs, this 4 hour order block, again, from pretty much you just have to take my word for it. 2024, is it? Yeah, July 2024. That daily order block. If I'd have taken a sell position immediately from there, I'd be quite happy. But I was waiting for price to develop because I understood that the DXY is bullish, meaning that the primary incentive of UJ, US dollar, also bullish. I've got no right to be selling yet. So the fact that price action is not bearish and it's bullish, but most in terms of the immediacy, price is ranging. What do you think I have to wait for? 4 hour candle close towards the downside. What's that going to do for me on the lower time frame? It's going to break structure points towards the downside. Now, 15 minutes, just for me to go over it, we've been making higher highs, potential higher low. Have we made a higher high? No. However, it's still, I don't have a reason to short yet because we're just doing nothing in this area. I want to see a break. I want to see a pullback. The order block is already there waiting for me to short from. I just want to see price develop first and foremost, and I'll be happy to take a short position. Now, clear targets by way of 4-hour 50 EMA. So hopefully by the time this 4-hour candle closes out of this range, I don't really want to see it tap that 4-hour 50 EMA, because after tapping that 4-hour 50 EMA, my anticipation is continued highs. Therefore, I'd have to wait for something a little bit better, i.e. price start to develop on the 4-hour time frame, just like we have on the way up. Look how price is beautifully trending towards the upside. So why is it that I can't wait for exactly the same in the opposite direction before taking a short position? Why is it that we're getting so impatient when it's time to trade? However, if you just look at price action, and we'll take it nice and easy here, eyeball 4-hour order block, because price then broke up towards the upside, higher high, higher low, there's the higher high. Simple. So why can't we just wait for exactly the same, to wait for a long, well, here would have been the long position like that. I hope you see it. So why can we not wait for exactly the same lower low, lower high, lower low into an area, order block selection, boom, short position, easy money, just like that? Why are traders finding it so difficult to just wait? I don't get it, but I'm here to explain it. So that's the positions. UJ, I don't mind it whatsoever. And just to finalize and tie that over, in terms of waiting for price action to break, here's my immediate structure point on the 15-minute time frame. The more it breaks and I'm not in that position, the better it is for me, because that means when I go to take a position on UJ, price action then would have developed. And the 4-hour hopefully will then close below that area, pull back into this position for a short. Easy, easy, easy stuff. As I mentioned to begin with, price action looks beautiful at the moment. I just hope fundamentally we aren't absolutely crunched as price starts to wake up. Now, the final, in fact, before I go over the final pair, we'll go over GCAD just quickly for you guys. So you see that I also do as I preach. I think one position all week, pretty sure just the one. GCAD, higher time from analysis. It came rather from by way of higher time from daily order block. You see it there. Perfect. Why is it important? Well, price was failing to break above that point of interest. Therefore, if price is failing to break above it, I really want to be shorting from it. I'm not going to short from that daily order block. It's far too large. Therefore, I refine it down to a 4-hour order block in the same area, but it's just a 4-hour order block just here within that daily order block, and I seek to refine it down even more. Now, price action on the way up into that area, of course, it's smart money concept. It's bullish on the way up. As you can see, a lot of illustrations had to go into taking that position. But what did I wait for? Look at structure on the 15-minute time frame. We were higher high, higher low, higher high, higher low, higher high confirmed. What did I do? I called this area a key structure point. What did I wait for? I waited for price to break that area, pull back into hopefully a 15-minute order block left behind. There it is, and look at the position. Simple as that, team. There's not too much more I can say about that. GCA's doing the business these days, actually. 3% there and 2.7% there. Nevertheless, GCAD, I haven't updated it because I knew as soon as I closed that, wiped that chart, I'd failed to remember the position and I have to go through my journal, etc., etc. But that's GCAD. Anyway, back to AU quickly. Then I promise I'll let you guys enjoy your Sunday. AU, been waiting to short AU pretty much, well, at least for a good couple of months. Why? Weekly order block to the left. Take my word for it. It caused price to break down to the downside. Here's the evidence. Low created. Therefore, when price comes back to that weekly order block, I want to be shorting. This happened May 2022. Price came back in January 2023 and price returned, well, April 2026 at some stage. Therefore, I want to find the last bit of liquidity remaining from the area to take a short position down. That was my thought process for a very, 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 very long time. And unfortunately, price isn't pulling back. I understand if I just press sell with 100 lots, I'd probably be a multi-millionaire now. But I had to stick to the strategy. Very simple. There's nothing more I can do but for trade the strategy over and over and over again until I get bored and just go live on an island somewhere. So, nevertheless, weekly order block by way of now we know already that we're trading from that higher time frame weekly order block, and of course, price has developed out of that area since we're waiting for price to pull back. So we have another weekly order block. Let me zoom out so it's not too in your face. There it is. So weekly order block from way back when. Price came in, failed to break and close above. Therefore, I'm looking for predominantly shorts out of that area. Price has started to develop on that weekly time frame as well as lower time frame. And as a result of that, well, by way of one candle in particular, this one, we now have, if I delete it and put it back in, a weekly order block by way of market imbalance. So return. Now, what am I expecting? After simple stuff, after a low in the market, what am I anticipating? A lower high followed by a lower low continuation. Therefore, what am I having to wait for before I take a short? A pullback. Therefore, one alert will do it up at the highs, and then I'll wait for that alert to go off, revisit my chart for AU shorts, and it's as simple as that. Now, on the daily time frame, I want to find out, do I have my confirmation by way of understanding, can I be wrong? It's okay to be wrong, but just understand the position I'm going to be taking. Do I then necessarily risk 1%? Am I risking 2% on that particular position? Or am I going to go down to 0.5% or 0.25%? I don't mind being wrong, so long as my risk is always managed and the position makes sense. At the moment, looking at short positions just on one time frame only, shorts make sense. And that's without going through daily, 4 and 15. Now, confirmation time. What was price action doing? We were making higher highs and higher lows. Key structure point in the market just here. Price was failing to break above, excuse me, below. Then we had this as our sign. And we also broke that daily 50 MA. From that point, I was waiting for price to pull back to that order block here. Waiting, and price didn't pull back. Now I've had to now wait for price to redevelop. I know, painful, absolutely painful. Redevelop, print me that daily order block again, as much as I was waiting for up here, and I just have to hope and wait rather for price to return to this area for me to take an AU short. I think that's the best looking short at the moment on AU based on weekly daily formation. And based on the inverse, I don't see any other area to take a long from until we get to this area. So I still see the shorts are very much so in play. Of course, if market gaps down to this area, then obviously I'm not going to be waiting for shorts now. I have to revert my bias and wait for breaks of structure on the 4 hour and then look for something like that back up to the area, then look for the short. But I'll quickly discuss all of the scenarios and I'll let you guys go. So we understand daily price action, that makes absolute sense. Now 4 hour, where it really starts the analysis based on price action structure, basic formation. What's going on the 4 hour? I have to double check that myself. I can't remember. Bigger picture, we understand. We've got a low in the market created, lower high, potential for that lower low to be made. Now that's big picture stuff. Intricate types of structure by way of reasons why you may want to take a reversal. Am I against it? I'm not fully on side with it because I definitely see better pairs that I'd much prefer to trade. However, I can understand why we could take a long position. Let's talk about all of them and then we'll call it a day. So, based on if I am incorrect that structure point did not stem from here, and in fact structure stemmed from this area, then what's this? That's a break of structure, meaning that we've now made a new high in the market, followed by a higher low, followed by a potential higher high. Am I wrong to anticipate price to push off from this area? So that's the first thing I need to ask myself. Am I forecasting price to actually move up? Well, yeah, because I'm waiting for a short position. So if I'm waiting for a short, that means that price could well move towards the highs. Doesn't necessarily mean I need to be in that long position, but it makes sense why I can see it first and foremost. So I understand price can move towards the upside. So that's one good reason why I may want to take a reversal position on AU. Does that make sense based on the DXY in the immediacy? Well, DXY strength is going to push AU to the downside. DXY weakness is going to allow Aussie dollar to give off seemingly good signs of bullish pressure. Let me just quickly refresh you to the DXY. Yes, we understand longer term we are DXY bullish, but in the immediacy, I am going to anticipate this on the lower time frame, a rollback on the DXY. So if I'm going to be getting a rollback on the DXY, does it then make sense for AU to move to the highs? Yeah, it does. Does it mean that I could potentially take a long position on AU? Yes, it does. That's my confirmation. So when the DXY starts to print signs of bearishness, I then can get myself ready for waiting for anticipation by way of bullish price action coming out of AU. I don't think we should be looking at taking this immediately. That's my honest opinion based on structure points. Even if we say this is incorrect, and we say this is correct, and we say the most recent low actually came from that area, then really I want to see this area break to the highs, roll back, and look for the long position up. Now, I get it. Aggressive positions can be taken without breaks of structure towards the key or structure points. That's fine. But I'm just not with it at the moment. I don't think first thing Monday morning you want to be taking an aggressive long position with the anticipation on a DXY rollback with recognition with all the fundamentals that's going in the market. And while we're there, have a quick look and I'll let you guys go. So tomorrow, what's the date now? It's 21st, tomorrow's 22nd. So we've got CAD news. That's pretty much it for high impact news. Apparently, we go medium for a quick second. Apply that. So a ton of medium news. What do we have? What do we have? Any dollar? Where's dollar? Okay, so this dude speaking, that's obviously going to shake the market, but we'll have a look when as and when it happens. But for now, I'm never one to want to take an aggressive position first thing Monday morning. Nevertheless, what I am happy to see is this 4 hour order block that I had in the market from last week, 11th of June. Price, what happened? We respected it. We didn't close below. We didn't close well, that's it. We didn't close below. Therefore, it has every requirement to stay on the chart. I refined this 4 hour order block down into this 15-minute point of interest just here. Again, same thing. Why have you used that 15-minute order block is what I'm always asked. Well, I'm asking you to look at structure. We move towards the downside, making a low in the market, a lower high, followed by a lower low. Therefore, my structure point in the market here could be seen as a structure point. Also, here could be seen as a structure point. What happened towards the upside? We broke structure towards the upside. Is there an order block there by way of 15-minute candle that I can say I can accredit that break of structure to a particular point in the market? Yes, this bullish engulfing candle came, leaving me with an order block behind. I use that order block, move to the right-hand side, and look at that for perfection. It's not me blowing my own trumpet. It's the charts that is just respecting the technical analysis. Now, if I would have set a long position from there, stop loss below, which I must admit I didn't, easy money to be made, 3.5% just by using your higher time frame bias. However, I don't trade like that. I want to see price action, break structure, then come back. So now I'm trending on trading in line with the trend on all time frames. It makes sense. Everyone's heard the trend is your friend. Therefore, you want to be trading alongside the trend. As many time frames as you can trend alongside, the easier the game begins, right? Now, the fact we understand we haven't broken structure fully on the 4, on the 15 means that any position, in my opinion, at the moment, is a reversal type of opportunity. And I don't really like trading reversals. The first 2 years of my trading 10-year journey, I decided to entertain reversals without waiting for clear breaks of structure where I can see simply based on optics that we don't have a break of structure above that area. And it wasn't the best period, I'll be honest. However, 8 years later, I understand that if I'm going to take a reversal, I need to be very aggressive taking it. I need to move to break even almost instantaneously as soon as price moves in my direction. And the rest is pretty much a hit and hope because the trend is against you. So trade alongside the trend. So AU shorts, I'm in favor. I think it makes lovely sense. AU longs, I'm not against them, but it's a reversal trade until further notice. And I'm not reversal's biggest fan because it owes me money. So that's all I have, team. Of course, tomorrow or in fact, towards the end of the evening, I'll upload GCAD. I'll mark up US dollar CAD as well, We'll see where to go. But based on what we've spoken already on the DXY, what should you be waiting for on US dollar CAD? There's no higher time frame analysis to support us going short, unfortunately. But we understand the DXY should roll back. So if the DXY as an index rolls back, what's going to happen with US dollar? The US dollar should also roll back. However, do we have any reason currently to be looking to short what's going on here? I don't think so. Therefore, I think US dollar CAD should be put to the back burner and trade other positions that are so beautifully clear, guys and girls. It's so evident. But if you're desperate to take a reversal on US dollar CAD, well, read price action. Higher high, higher low, higher high. Structure point in the market. Before I even look at US dollar CAD to take a short position, I need this area to be broken. It's pretty much as clear as that. What I am seeing is an order block. This is me just doing it very, very quickly, guys and girls, so bear with me. But so that is a break of structure only on one interval. And remember what I've just said, the more intervals you can identify structural breaks on, the cleaner your trading is going to be. So if I take a position based on only a 15-minute break of structure, which again is not the end of the world, but based on the 4 hour, what are we? Are we bullish or bearish? We're bullish. Therefore, I'm taking a short position when the 4 hour is telling me I should be taking long positions. I have no idea where the 4 hour, in terms of its own structure, is going to start respecting. I.e., what I mean by that is we've made a high from here. I don't know whether the higher low is coming in here to make the higher high. I don't know whether price is going to drop lower, lower, lower. So anytime we get that structure break on the 15-minute time frame, all that could be on the 4 hour time frame is price just looking for that higher low after a clear higher high in the market to then take you out anyway. So wait for price action to develop, team. And just by optics, what I'm seeing is here's a clear, nice structure point in the market. So I'll be inclined to say, you know what? Until 4 hour time frame really starts to develop and starts showing me something, then I'm not really interested in taking US dollar CAD short, despite understanding where I could take money from the market. What I am interested in is US dollar CAD longs. But I'll be honest, team, I think I've kept you on here for far too long already, and the chart isn't marked up. So I will do that in my own time and share them in the live groups probably tomorrow because I just foresee there's going to be a lot of market gaps, and I'd hate you guys all to waste your time. But that's why I went into so much depth today. So forget about the fact price action may not respect what we have technically. The thought process by way of strategy is fixed. I never change my thought process regardless of what's going on fundamentally or technically. I just adapt what I'm looking at based on what's in front of me. And it's as simple as that. I manage my risk accordingly. I understand what news is in the market that could potentially mess up my day. And I wait for breaks of structure. And it's as simple as that, guys and girls. So it's 7:15. I'm hungry and my missus needs to cook. So I'll let you guys go. Thank you all for joining. It is recorded, so I'll upload it in the private channel as soon as it has been, whatever the word, downloaded. But who is this posting? Someone in the sub. Oh, blimey. Someone I let in the group decided to post links to a free trial. Well, good luck, guys and girls. You fancy taking a free trial with some fraudster that managed to join the group, then good luck. I'd suggest otherwise. Uh, US dollar CAD said, I'll do US dollar CAD later, I promise. And well, that's pretty much US dollar CAD. If you're going to look for a long position, all right, while we're on the chart, if you're going to take a long position, let's be honest, where are you longing from? If you want to unmute yourself, you can go for it. But I honestly can't see where I can long from just yet. What I can do first and foremost is understand the lows in the market based on the 4 hour time frame. Here's a 4 hour order block that I can see based on just me looking at it and based on the higher time frame picture that if I look at this 4 hour time frame, I'm seeing that price didn't do, let's move it slightly higher. I need to get rid of that. Price didn't do too much at all. And then we had an absolute rocket. So that rocket, I have to try and accredit to an order block. Now, I don't know if the move itself came from here because that's the key. Here is the key point of interest based on the higher time frame analysis. If I scoot over and you can see the weekly time frame, the weekly order block is by far the best reason why we've had that move. Why? Break of structure, break of structure. Therefore, order block to the downside. I see that right down at the lows, the best place you could be looking for a short from. Excuse me, a long from. Don't take a short from there, please. But so definitely the best long position is this area here. However, I know traders are not going to wait for that. Just like we've seen whatever that pair was 2024 and then we're now there, you know, traders aren't waiting. So here is the best position for you to take a position from. So as an intraday perspective trader, what I would be doing is refining that down to the 15-minute time frame only. And as a result of price being very bullish, I will just divert, or I should say default, to what the trend is doing. So forget waiting for reversal short positions. I'm in the market to take longs. Now, the first question is, why are you in the market to take longs? Well, what's the market doing? We're pushing bullish, therefore I want to be involved. Right, so 4 hour order blocks, I can't start the analysis. Let's see if we can start by the daily time frame here by way of where that rocket came up, just to support that 4 hour order block at the very least. And you can see, just as we put this daily order block in the market, refine that area down and look where we are. Beautiful, refined area. Therefore, again, nice position in the middle of nowhere. If you're not happy to wait for the better area down at these lows on the weekly time frame, then your intermediate position is most certainly by that 4 hour 50 EMA. With that said, I wouldn't be taking immediate positions from that area, because by the time price gets there, I'm sorry to tell you that price is going to be incredibly bearish when price gets there. So you might want to double check the analysis. And that's a hell of a way away, actually. When we zoom out the 15, that's here. So second best long position where I'd be looking to take a long from. And then best case all the way down at these lows. But even so, you can already see my analysis where we were looking for price to come back down to when price was just here. Absolutely no pullbacks. I had to see price move all the way without me, but you see it. This drawing, I didn't just do that. That was from last week when price was up here, and I was saying when price comes back down here, immediate longs. Now price has tanked without us. We're having to play a little bit of catch up. So I understand why you're inclined to look for long positions. 15-minute only. So here's second best. Best is all the way at the bottom. In terms of immediacy, basic price action and structure. Let me just make that slightly bigger. And then where are we? Where are we? Cool. So all we're in the market for at the moment is higher highs and higher lows. So where are we? A higher high was created from here. Therefore, where did that happen? Go move, work your way back. I'd say here, I'll be honest. I think anything before that stage, you're kind of clutching at straws and pulling yourself into not risky territory. I mean, let's see. Does that make sense? Now, here's how we're going to build the picture up for this, and then I really will let you guys go. Asia range. Once that starts to develop, this is going to be the catalyst whether or not I want to use this order block or this order block. Let's call it the worst case scenario. Okay, let's go best. Best case scenario, price smashes through this area. As we can see, we're already quite close to it as we speak. When market opens, let's see what happens. But let's say price breaks that area, and we have an Asia range highs and an Asia range low. Then London opens and we start to gravitate around. Then absolutely here is a decent point of interest where I'll anticipate a long position. However, what I won't be doing is taking immediate positions. Once we see that happen in the market, what I'll be looking to do is isolate, you've guessed it, the most recent price action that has been responsible to create this low that is driving price into this order block. Once I can then anticipate where that price has come from, i.e., this is going to be the lower high that's created that lower low. I'm simply waiting for price to break that area, pull back, give me then another 15-minute order block that I can trade from. Look for potential lower time frame 1 minute break, 1 minute break of structure or bullish 15-minute engulfing candle. Let's just keep it simple. 1 minute break, pull back, lower time frame, and then you'll probably get in at that stage. And then you'll ride price up. At least once you've waited for that. I mean, you're not waiting for a lot, let's be honest here. We're in the market to invest, and no one says you need to make an investment every day. People get really confused with trading. Trading is just a way of investing your money. Yes, you can be a day trader. It doesn't necessarily mean you need to be making investments on a daily basis. When you've got your money piled up in stocks, which, you know, I don't know you guys what you're up to, but I'll be honest, having money in stocks, I don't check those stocks every day because I'm not expecting my well, I am expecting my investment to fluctuate every day, but that investment to me doesn't matter on a daily basis. So me actively trading the markets every day, there is no reason to. I need to be waiting for structure to develop in my direction. More time frames, the better, and then looking to make an investment. People get confused because we're day traders. We need to be trading every day. If price isn't there, don't trade it. It's so simple. Anyway, once you get that break of structure on the 15, that's good enough to take, in my opinion. If you're really, really aggressive and really sharp with your shooting, you could take a limit order, but I would suggest being very aggressive with moving and managing your position by the area that has caused the drop towards the downside. What I would be more inclined to suggest, you wait for that lower time frame 1 minute break of structure. So you've got it on the 15, tick, wait for it on the 1 minute time frame. As soon as you get the break on the 1 minute and price pulls back to the 1 minute order block refined within the 15, then that's a beautiful looking trade. That is a trade that I would probably consider based on the fact that we are just so bullish. And if I write in my journal, hey, I took a long position on US dollar CAD when weekly, daily, 4 hour, and 15 was bullish, I can't really do too much wrong, can I? Right. Good evening, everyone. Thank you all for joining. I appreciate your time as always. Let me get this recorded. I'll do a pretty thumbnail on YouTube and I'll post it on the private groups for you all to rewatch if you have 2 hours spare of your life to rewatch that. But props to listening on a Sunday. Appreciate it. Rob, keep me posted. Tomorrow morning, I'll check the calendar. I'll double check if we're live tomorrow. I'm not sure to be honest, but nevertheless, keep me posted, my friend. Lionel, Philip, Mana, thanks for joining. Appreciate you all. Have a very good evening. I'm eating some food now. Take care.
Cheers, Charles. Enjoy.
Cheers, Rob. All the best, man.
Catch you later.
In a bit, man.